Run your day with Runday.ai.
Well, John, hello. Happy Thursday. How are you today?
Thanks. I'm doing very well, thank you. And how about you?
I'm good. I'm calling from Fort Lauderdale. How about yourself?
Yeah, I'm in the Seattle area today, so I'm actually around the corner of the lake in Renton.
I lived in Redmond ages ago when I worked at Microsoft. I was in the Visual Studio environment
Yeah.
team.
Mm-hmm. That sounds like fun. You know, we have a light rail that goes to Redmond now, so you could have go on the light
I
rail
took
and
my
get down
bike at the
that.
time, so
Yeah,
I just biked through the woods. Actually, I remember that was a good time.
yeah,
They
that's
had
good.
trail biking. Yeah, yeah. Well, tell me about Mossy Ventures and what you're doing for investors.
Yeah, so down at the heart of the tech process, we have early startups that need to get funding from someplace. And the place that seems to be the most effective is from personal investors investing in them. And so what Mossy Ventures is focused on is the activation and creation of new angel investors. So if you look around in any ecosystem, like go to Seattle and say, who are the angel investors in Seattle to Google, and it'll give you a list of angel groups.
Mm-hmm.
Where did those angel groups get their angels from? And so,
How do you define angel? So what check size is it normally these days?
well, so the law is that, and it was defined in 1934, to be investing in unregistered stock, you need to be accredited investor, which is defined by Reg D 501, which basically says you have $1 million in assets, not counting your house, or K in income the last couple of years, or 300K with your spouse. And so if you're at Meta and your median
That's a
income,
lot of people these days with inflation, right?
it is, yeah. And they didn't write in a cost of living increase in that. And so now what used to be 0.001% of the population is now 15% of the population. Most of
So
those
any
people,
credit investor you consider an angel investor.
I do. Now the question is, how does someone who has $1 million invest? And how is that different than somebody that invests as a $10 million net worth? And my personal belief is that, I take 10% of my net worth and I'm willing to burn it in the backyard and put it in this strange thing called angel investing. And then I need to be in 20 to 40 deals. So $1 million divided by 20 is $5,000 when I take it 10% of it, right?
Okay.
And so I think everybody below 5 million in net worth should be writing 5K checks, but you need to write 20 of them, and you need to write that over, I don't know, the next 6 or 8 years, right? And so if you're writing 5K checks, how do you write a 5K check in a meaningful way? And then my answer is people below 5 million should be gathering in groups where they put the money all into an SPV and then write a 200K check so that they have impact on the startup. But personally, they're putting it into 20 different piles at 5K a piece.
Yeah, I think that my first venture round, there was a syndicate and they did it that way.
Exactly.
Tell me about how this got started. What's the origin story?
So I sort of backed my way into being an entrepreneur by running an internet service provider inside the university. And then we were forced to start charging for that. And then we were kicked off the campus because we were making money. And so I had an internet service provider on my hand. And in the process, I learned about how to run a business. And then I was in a relatively small college town. How is this college town's economy going to, take advantage of all the bright people here? And to do that, you need the entrepreneurs to get out of the garage and to talk to people and to raise money. So we started the Willamette Angel Conference in Corvallis, Oregon. And then out of that, we were able to make a lot of impact in the local community. And then when I moved to Seattle, I saw the same problem. They had a lot of angel groups, but they had all sort of aged up a little bit. And so there was this shining light underneath everything where the early companies were not getting funded, but the later companies were getting funded. And so we started the Angel Conference in Seattle in 2012. And then COVID made us virtual. So now we look at all of the US and Canada for the Seattle Angel Conference. Since we've been running for 10 years, we then decided to open up the transatlantic version. So we now do things between Armenia and Alaska for the transatlantic version. So we run 4 cycles a year.
And then in this age of AI we're entering, and I believe it's an age of humanity more so than any technology, how are you seeing the angel ecosystem kind of adapting to that?
Well, we just had the Angel Capital Association meeting a week ago, and there was lots and lots of discussion about AI and angel investing. There are several groups that are starting to use angel or AI efforts to funnel their deal flow and to evaluate their deal flow. We, of course, see lots of different companies that have AI slapped on the top of it. And so there's a growing hesitation when you say AI with your medical device. Then we wonder, is it really AI or is it just you slapping on, I use
Yeah,
ChatGPT for
I
this
wonder
thing.
that myself.
So there's a lot of, greenwashing for some things and crypto washing for other things. And now we have AI washing for other companies, right? But I would say that we sort of expect at this point that every company that we're seeing is taking advantage of angel investing at some level. They've put it into their process of doing customer discovery and customer acquisition. It probably means that they have some kind of agentic thing as a part of their regular business processes. We fully expect that we will be seeing more and more companies that are like the 3 to 5 people companies that make hundreds of millions out of that, just using AI as their engine. But they don't seem to be coming to us. That kind of company is not coming to us. They seem to be more active in the Bay Area, I think. We're seeing a lot of medical device companies. We're seeing a lot of companies that are sort of not branded AI, where they're getting the AI venture money quickly, but they probably ought to, in their operations, be running with AI is sort of a fundamental assumption that's starting to come up in the investor conversations.
If somebody in the audience wants to become an angel investor, potentially work with you, what's the best way to do that? Should they reach out to you on LinkedIn or do the application on the website?
Happy to have people come in to any of our workshops that we're doing, and we post them on that calendar you're showing. Happy to have a LinkedIn conversation. If somebody's accredited, they should probably read the David Rose book and learn about angel investing. That's the sort of the course book we use. We are essentially an angel investor kindergarten. We give people a direct experience and give them perspective, and then try to get them off into the other angel groups that then meet their investment idea. We have a investor interest form on the website that people can click on in the contact us thing. So that gets us connected pretty quickly. We run typically multiple workshops every week. So there's an open coffee that we're doing. There's angels and beers that we do. And then we do workshops as well. That's both Europe and US that are on that. So as people travel around, they might connect to things that are going on in other countries as well.
Yeah, next one's Women Invest, but it's 4 a.m. for me, I suppose.
Yeah, but it's an in-person
Europe.
thing in Barcelona, yeah.
That makes more sense. Well, thank you so much for joining us today.
Oh, happy to be here. Thank you so much.